so far. A few predictions I want to throw in. Crypto market plus stock market. And some interesting movers that have been, well, moving. Potentials for DWAC, which is Mr. Trump's social media startup. We're going to go through some details on that. And BBIG, which seems to be heating up again. I'm going to start with BBIG, because that's the most interesting bit today, or this week potentially. But keeping general tabs on AMC, it's not following our typical, how to say, trend process for all of the shorts to cover. The only bit that's still very high is our shares on loan. So they still got a lot of shares to return, and it's been growing, and it's currently about the 20% of the float. So that's still very, very hot. No big changes on AMC. It's still prepping. Based on the technicals, we can see that it is moving up, higher lows, people buying it up each time the low presents itself, showing buying pressure from anyone interested, and more people seem to be interested. I do want to check out some trends that might be happening, but we are at a very, very good cross point. Very reminiscent of what happened before. We had a couple of bursts up, comms, a big burst up, and then a final explosion here. Based on where we are now, we could be looking at this location dropping down a little bit again, then a burst and a burst, but we could even be up here ready for that big burst. It really is a flip of a coin, but regardless, I'm still very confident in the case scenario of the data. They have to buy these shares back. They have 105 million shares to buy back. These big run-ups were basically 20 or 30 million shares average covered and returned. We went from 140 to about, I don't know, 90, with about 130 being actually shorted, and then they're going down to about 95 or so being shorted, million being shorted. So the data is, again, a big estimation, but you can say that this run up here was about 20-30 million shares. The other run up way back in January was about 15 to 25 million shares, and we're still hovering at a very, very high return rate. They have to cover. It's no question about it. It's a illegal cover. They can hold it for a long time, so, well, it can take a long time for that burst of price, but I am nearly 100% confident that regardless, unless they do something so absolutely dirty in the Wall Street mannerisms that they do, but that would cause a very big, dissatisfaction in the free market. So if the free market is going to present itself as a free market, the general meaning is that they have to cover 105 million shares at some point in time. They can continue using the obscure rules of kicking down the can to a later date, but it's gonna have to happen. There's no way around it unless this free market is indeed corrupt to its very core, which can be debatable. It is corrupt on a certain level, but how corrupt is it is up to question. So in a general sense, we have, let's say we have about a minimum of 84 million shares that are guaranteed to be actually shorted. There's 105 million shares that are on loan, which 84 of those are actually currently being shorted. Now, that's the latest estimations. It could be higher, it could be lower, it could be minimalistically 84. Plus, we don't know exactly what's happening with the failed to deliveries. They have been decreasing, but there have been ways that they can hide these values on a very interesting options market, derivatives market. So that's one thing to consider. So that's why I'm considering 84 million to be the minimum of the total, which means another 2 of these bursts or 1 giant burst, and we're pretty good. But that's excluding the fact of where are these fails to delivers, right? So that's one thing I'm keeping on. There's nothing really that's changed with AMC. It's still going on a forward bounce. It's just basically winding, coiling in. Normally this is what we call a bull pennant, and because it's a triangular nature, it is bound to go up because of the demand and the following. Now, outside of AMC, which I am still in personally, I did see some interesting movements with our BBIG last play. It is currently very high on the utilization, so shorting volume has decreased drastically. There is still some shorts that can be used. If I was to calculate this value of possible shorts that could be loaned out, I'll reverse engineer the current loans and the utilization. So if I was to do more proportional values, let me get a little tool here. I would need to have 36.45 as the current short. So we have 36.45, and the current short is a 97.79 value. And what would we actually have if it was 100%? So what's our X? What would be the 100% where there are none left? Reverse engineering, I'll do a 3.45 algebra value divided up, multiplied by 100, and then divide that by 97.474. So out of the 36.45, currently we're sitting at about 37.29 million shares. We subtract what's already been taken, 36.45. So that's less than a million, about 842,000 shares left potentially today. It could change every single day, but today they have about 842,000 shares to be short, or being able to short BBIG, which is not a lot of pressure, but we do see some interesting cost to borrow averages, which is really where my personal red flag goes to. I love watching cost to borrow go up because now the shorts are sweating. This is 100% cost to borrow. So if you've borrowed $1 million worth and sold them right away, well, now you have to pay on the yearly cost to borrow $1 million if you decide to hold your shares for a million a year. This is a yearly interest, or interest payment that they have to make, but it is paid on a daily basis. So if from today nothing changes consistently and they hold their loan shares for a year, then they basically have to pay the exact same number they actually bought or shorted those shares for. So if it was $1 million, then they're gonna have to pay $1 million, basically in the year's time, rushing their profits to zero. Now this is where it really starts to heat up. This cost to borrow increasing high, 118% in the last week, right? It doubled in the last week. This is a key that they have to start relieving their shorts. At some point within this value, 100% is a very big key value that they will have to basically buy back the shares that they have sold during their loading process, because it's going to get very, very expensive for them to keep holding, which is very nice because we're currently sitting on the BBIG value at 542, open, close at 519. So the last price last Friday was 519. This is a steal for the potential squeeze that could happen. Now, could it go as far? Potentially. It could go high up to those values, but we don't know how many shares are under this cost to borrow minimum value. It may not be all shares. So they could only cover the shares that are expensive to pay off or to pay the loans on. And then they would keep all the other shares that they have shorted and then wait until again their CTB also increases. So buying at this value is very nice. It is consolidating. We've got a nice low at the $5. We could not reach below $5, which is very, very good. And we're at the 519 right now. This is a perfect buying opportunity for the next growing potential, which could be this week potentially. If we do look at the live charts though, let's just double check on BBIG because this data is a little bit off to the side there. Now we're going to look at SHIB as well, so we're going to take that into consideration in a bit. The crypto market. Oh, let me clean my screen. Boom. Cool. So BBIG 548. So as we discussed this, I haven't even looked at BBIG yet, but we are bouncing back already. So this was the location I mentioned, and now we're already making that bounce. And also we have breached our SARS, not to be confused with the biological term, but our SARS value of reversing our trend. We are now in the positive trend, so it is a good time to buy BBIG for that reversal process, plus the CTB covering, the cost of borrow covering. That's my main focus for this week. Hopefully it's only a week, so I can get in, get out, make my money, go into AMC, you know the deal. But I found a lot of, not a lot, a little bit of an interesting factor here. I love to look at the ownership of a specific stock, and BBIG has matured very nicely to a 80% retail public hold, which is great. Now, inside individuals, that kind of contributes itself to holders, unless they are also shorting the stock, but that would make no sense because they would literally be shorting their own company, which means a negative. So I highly doubt individual insiders are actually shorting, which leaves about 6.7% of institutions that are actually shorting this. That's not a lot of institutions, but it doesn't mean that it's not a lot of shares, because we took a look at how many shares they're actually shorting on BBIG. That value, again, was about 36 million plus potential failure to delivers that are decreasing over time, but still potentially being played around with in the options market. We don't know for sure. We can say that 25 million minimally have to be covered. So there is a potential short squeeze, possibly one, possibly two, depending on how many cover. If they want to get the heck out of this and call it a day, then all 25 million would have to be taken down. But they could also prolong this even longer and only cover the highest cost loans and then keep the others, which I should be keeping an eye on how many get covered after this little drop in the cost of borrow and see an average of the drop. So I do like the fact that basically 93.3% of this share of this stock is basically being held, while the 6.7% of the unfortunate institutions are holding a bag of loan shares that are going to potentially be squeezed. I like to check on some of these and take a look at what's going on with the holders. Vanguard Group has decreased their their holds with BBIG, showing a possible either lack of confidence for the next squeeze, or potentially, since it's not a big percentage, they still have $4.9 million worth of BBIG value of shares, but their reduction is probably hedging their risks. BlackRock has not changed, that's okay. The Citadel has increased, which kind of is interesting because they're trying to fight with the apes and see if they can basically keep on holding AMC's GME loans by making money in other locations in order to be able to keep holding and paying the cost of borrow on AMC and continue to short it because they don't want to pay such a high price for those values. Now, I always look for Renaissance. Renaissance is not here. Renaissance is a similar sort of institution, but it is run and judged by an AI, artificial intelligence. And normally I take a look at it to see the computing power behind the algorithms to see if there's any potential support by these artificial intelligent algorithms. It does not seem that Renaissance is actually in this trade, which does not discourage me. But again, it does show that potentially it's just one of those squeezes that will eventually die out. On the other case scenario, if we take a look at AMC, I believe Renaissance has already still been in here. No, not management. Ownership, please. Thank you very much. These are the holders, recent insider transactions, ownership breakdown, and where's my Renaissance Technology Corp? There they are. They've increased on AMC. Hint, hint. The algorithms say yes. I like it. I like it a lot. They've increased by a lot, which is very nice. BlackRock also increased. Vanguard also increased. I mean, just look at all the Simplex trading. They don't want to miss out on it either. They've increased heavy. So there's a lot of current increase since June 30th in the presence of shares being bought in AMC. Why would that be? Well, because of our potential squeeze and some might say the reverse delta of the overall market. What does that mean? Well, when the overall market goes through a crashy crash, our AMC will have to go up. That is the inverse delta. Now, this isn't a fallacy. What happened with Volkswagen? If anyone remembers, oops, Volkswagen, VWA. Okay. Yeah. Let's see if this is a chart I'm looking for. Yeah, let's go back to that 2000. Let's do the weekly. The weekly is nice. No, oh, there it is. Oh, that's the one I'm looking for. So sexy. So this was in a case scenario of a inverse delta value. Look at that sucker go. What date is this? Oh, 2008, you say? But how does Volkswagen have anything to do with the mortgage housing crash of 2008? Well, sit down. I will tell you the story. And the story is very simple. Those same people that abuse the market are basically in other stocks. That's it. This is a situation where all of their actual assets had to be liquidated because the whole housing market crashed, which means that they had to liquidate their Volkswagen shares or cover their shorts, because this was a representation of a short squeeze. What was the value beforehand? Down over to the $50-$60, right? Somewhere where our buddy AMC is. What's the value here? Call it 53, 50, 60s. At one point it was even way less down over here, about the 30s. So very similar to our AMC, but trades were done very slowly. We didn't have apps in 2008 that would trade for us. So we can consider that short squeezes today are, well, sped up, because Volkswagen took about 2 years to fulfill its squeeze, plus the catalyst of the market crash, which caused all the bankers to get very worried about basically covering their liabilities with the mortgage market. So they decided to sell whatever they had, make that money, boosting the fact that they were highly shorting Volkswagen. There's a lot of history behind Volkswagen, and I definitely recommend for anyone interested in learning what a short squeeze is to take a deeper look online based on the data, based on articles that are written about the Volkswagen squeeze of 2008, again coinciding with the market crash. Now, I've been essentially speaking about a possible, well, everyone's technically speaking about a possible crash currently happening due to a lot of factors, one including inflation. Volkswagen is actually doing a fun little coiling process as well, very similar to what AMC is doing. So potentially this could be another possible play, which I have never seen the shorting on Volkswagen. So let's take a look at this. Oh no, it's not Volkswagen. Volkswagen. I can't spell. Why can't I spell? Volkswagen. Again. There it is. There it is. Let's see if days to cover, a lot of days to cover. Now, super low utilization. I would not say that Volkswagen has any potential for a short squeeze. However, its actual coiling process is natural due to the possible growth in its company. So this is just a general form of a growing company. but it doesn't mean that it does not coincide with what we saw in AMC in the similar coiling process. The closer the coiling of the up and down motion goes, the higher the breach will be, and that breach can go up and it also can go down. Do not be confident or 100% confident that it will always go up. However, this is a storyline that eventually coils to a certain point where the outcome should present itself, either up or down. AMC, with the holders, with the short interest, with all the details in between, I say up. So that's one thing to consider when seeing this coiling process of any stock. It does not matter. And of course, since we general public retailers are at a 75% holding rate, with a good space for 25% of institutions and a lot of shares here that can be squeezed and transferred to the retail market, which is really what we want to happen, given that the actual shares get covered and not kicked down the road. So my current temporary short-term focus is BBIG, as mentioned before. There is something interesting happening with DWAC. This is, I forget the name of it, but Digital World Acquisition Corp, related to or bought into or was bought by the Trump Corporation. Since it's so new, we won't see a very good representation of the possible shares at hand that are being shorted. So because there's not a lot of shares available, there's not a lot of option chains, you cannot do long calls, you cannot do short puts, you cannot do any of those derivative based products. But some institutions do still buy to lend in order to fulfill certain needs. The cost to borrow is pretty high. I wouldn't say that it's in any way cooked yet for a short squeeze, but I will say it's potentially on its way because the price is very, very, very huge. So why? Why is Trump's stock going so crazy insane right now? Well, sentiment. That's it. There's no fundamentals here to look at, everyone. This company does not even exist in potential products. They have blueprints, they have ideas that they're posting in the world, and they have a very, very discomforting, one would say, where is that? Gap fill happening down here at the 66 to about the 52 level. This is a possible fill, and we have been edging our way down to those filling process. So do I see DWC go down here? Yes, I do. Do I see it soon? I actually do see it soon, maybe within the next couple of weeks. Good buying opportunity when it drops down here and fulfills that gap fill. But there is also a short chance that the buyers will take over since there are no shorts available. This is a new stock without shorts available, which means there's nothing, there's not much of a short selling pressure. There's no selling pressure on this stock, which means easier to go up when the enthusiasm goes up. But what is the enthusiasm behind the stock? Well, consider that Trump's main goal or Trump's main concept is going against the mainstream big tech companies, social media censorships and all those kind of details. And the following behind it, he does have 3 million plus devoted followers that are possibly keeping a track of every single detail. And they bought in, and they are very powerful now since they have been buying down at the $9 to $10 level and potentially have sold on the hundreds up here. So there's a lot of money here in this play, and because it's a devoted following, they're not gone. They may have sold for a profit, but they're not gone. And as soon as they find that price delicious again, possibly down here for the gap fill, they're gonna buy that sucker back up with the money they made from the top of this. So I don't think this is over. This is only the first battle of a war against censorship. You can agree or disagree with it. I don't know personally. There's just so much bullshit on the internet, both sides, all over the place. I'm just a spectator, and I'm okay with saying I don't know. But it is a enthusiasm sentiment, and you cannot deny the fact that people are behind this for the fact of the censorships. I've seen censorships already based on the AMC and JME squeeze. They exist, and I start to question many things after I realize just how censored those two stocks are on the internet when it comes to producers, content creators giving information about it, especially on the YouTube networks. So I wouldn't say I'm far off believing in the censorship level of a lot of things, but I am definitely on a very high skeptical level, and I do definitely support the fact that someone needs to drop in and do something about this censorship, give us an option that has no censorship, which is what this Trump network is trying to do, and thus creating the sentiment of the overall market. Now, I'm not going to go in fully. I'm in just for the just in case factor with a few shares, but I'm potentially waiting until we get a nice cool down, gap fill, until I enter this trade on a full basis. The next running stock is PHUN, which is a media core conglomerate that supported Trump at some point in time in the past. And based on that support, again, a sentiment that's connected to those 3 million people, devoted followers, also have a similar growth perspective. It's basically flowing similar to how, am I in the crypto space? Anyway, it's similar to how our DWAC was running. So they're running in very, very close proximity. Nope. Oh, well, there is actually a gap fill down here. Pretty big gap fill indeed. So it has a potential going down to $1 something. So I'm probably going to wait for that as well. Although there is high buying volume in this profile around this value. A lot of movement, not necessarily just buying, but a lot of movements of shares within this value space. So it could be a test of this line and a complete drop down, or it could be a test, break, and secondary blow up. Now, I left PHUN because I don't know as a secondary play if it's going to manage too much, but I do also recognize that people here at the sub $1 value have left at the $23 value, which in comparison to a 1,750% gain of DWAC, this is about a 2,400% gain, which is a lot of money. Still within the scope, possibly an enthusiasm of those devoted followers here waiting for a nice big cheap dip buy. So I see it going down at some point as well, but I also see it going up. See, the market is interesting. You have to work with probabilities. You cannot work with definites. You cannot say something will go up or will go down. You have to find a way to put a probability to it. I see a higher probability of a drop than a bounce up. Therefore, I've left my trade, waiting for that drop, getting back in the trade, and because there is a certain level of sentiment in PHUN, I will be waiting for that drop back in. So that's the weirdest things happening in the last week or two. Let's take a look at what's happening with SPY. It's following my possible predictive trend. Now, I don't know if I mentioned this before, but based on some insider trading, Rosenberg specifically, there was a big dip happening here. Something happening with insiders trading off and then retailers grabbing those low price shares and taking us to a higher high. However, this for me is very reminiscent of what happened way back over here. Not as many bars to compare, but still a similar passage. If you take this down to the daily trend, at least you will see more bars filling in those spaces. Let me kind of readjust this a little bit. Oh, that's too much. So back in this little nook here, this was the COVID situation. I'm not sure if I explained it here before, but I might as well explain it again. During the COVID situation, we had a lot of insiders selling off due to news of a virus. This was known. Even Trump admitted to knowing before the fact there was something happening. So a lot of traders or insiders selling off yet again. So this is where I'm seeing history repeat. Now we are here moving ourselves back up with a potential big boy drop here, a falling knife catch by some retailers here unaware of what's happening, and then a nice sell-off of the retail space after this COVID news went public on March 4th, right? So we're seeing a lot of interesting patterns happening, and the patterns are not so much patterns as they are actual events happening around us. Insiders will sell off first, regardless. Now, the news up in the current trend that I've drawn that has not been filled in yet, it doesn't have to be COVID related, but rather insiders have to cover first whatever they're doing, selling off shares, selling off or covering their shorts, whatever that they're doing, they will get out of those trades. And this is a representation of this situation of insiders basically leaving the trade. But is that legal? We can debate on that. No, it's not legal. Creating or acting upon information that you that is not public, it is not legal. But welcome to America. The rich can do illegal things as long as they pay the bill. But anyone else doing illegal things, well, they're a bit unfortunate because they don't have the money to get themselves out of it. So regardless of whether we accept or like that fact, it does happen. And thus, the trend can be followed. The pattern, the human psychology can be repeated. So this is where I noticed this drop from a continuously going up process, a drop down, and then a recovery, and a new time high for that time period, and then a boom down. So, hope my sound effects are entertaining. We are entering that sort of situation now, and we have followed it pretty closely. I may have found, or may have not an accurate level of degrees. I'll probably readjust these since they are predictive, and they're not accurate, but rather predictive. But it is basically happening again. Rosenberg was news when he sold his shares, and who knows who else on the inside sold shares was not caught to be put on the news. So that's a red flag. That's our decrease here. And now with the recovery, this happened because the budget, the US budget, was extended until December. That's why I have aligned my downtrend in December. Now it could be 9th of December, it could be 29th of December, I don't know. I'm not a psychic. It could be on the actual date, which is the 15th of December or 16th, I can't remember. But it could also be preemptive, where people know that something's going to happen on the 15th and they leave early. That's kind of why I've aligned it around the beginning of that December value. So this is what I'm seeing. Now, in coordination with our negative delta AMC, this would be the catalyst we need for that burst in the AMC shares. As the insiders are leaving their trades, losing money on the way down, their money power goes down. They cannot hold AMC longer. They have to buy and cover their trades before they lose more money in accordance with the market. You cannot lose money on the market overall and AMC and GME in all possible situations. You have to unload your bag somewhere. The risk management of the situation is what's going to judge how it's going to play out. But in coordination with possible historic trends of the 2008 Volkswagen squeeze, this could be the activating factor. It could be anywhere within this space. It could be now, it could be on the dip, it could be in the recovery, or it could be down here. We don't know when they would do the actions necessary for AMC to cover, to burst. So that's the key. But based on my personal observations on the news and on the patterns of history, I'm kind of guessing this. And this is not a good this. Right? We're going down far, way more than 50%, based on support levels of the previous and so on and so forth. I guess, again, all of this is a guess. There's nothing accurate other than I have drawn them, and currently it's following the first trend that I have predicted, It could totally keep going up, and I could be 100% wrong. You know, stuff works that way. But I don't know. Confidence level. Again, in the market, you cannot be definite. You just cannot be 100%. I am probably 60-70% confident in this. The other 30%, 30-40% is that these Wall Street guys are going to pull some hat out of their sleeve, or bunny out of the hat, or trick up their sleeve, whatever the saying is. They're going to pull it, and then something's going to happen where they keep driving the market up, continuing to make profits, continuing to be able to hold on to those AMC shorts, which will only prolong the pain and create a worse drop later on, potentially with no catching knife recovery here. Just a straight down dip. I don't know. There's a lot of possibilities, but I'm pretty confident 70% average. There's going to be some form of this downtrend happening. And in accordance with a negative market and economy, we look to crypto. What's going on here? Very interesting stuff. Very interesting stuff. Now, I've again taken a procedure to predict what could happen to the whole crypto market by taking a look at the past. Honestly, you just can't ignore the past. This is why we have history class. Those that do not understand the past are doomed to repeat it in the future. Maybe the quote something like that. I don't know. I'm not a quotist. I'm not a literature specialist. But yeah, there is something special about things that happen over and over again in the human universe. We tend to follow the path that has been laid out for us in some way or form. History is a laid out path. And my comparison here, this hill that we had way back in May is this hill here. We've fallen down, recovered, we've fallen down, recovered. We're approaching the tip, however, we are not there yet based on percentage growth between the two hills and other comparisons I've done in proportional values. I've estimated, and of course with the psychological number values, 3.6, 3.5 trillion, I've estimated that we have a run up, possibly up to around 3.6 trillion of the whole crypto market with a possible way down. This is not a catalyst of going down. This is just how it happens. Crypto likes to move in big waves, and this is the time for those big waves. People that made profit up here, they're going to take their profits. It's just what happens in crypto. People take profits, so you should learn too as well. But being able to learn when is the important part. So we are rising up on our historic 2018 area, right? The January month. We are interestingly approaching January, but I think we're pretty offset by 2 months. So I believe it's going to go up. It's going to get denied on a psychological level of 3 trillion. That's going to be a big psychological limit, but I don't think we're done at 3 trillion. I think people will think we're done at 3 trillion, causing big fear, and then those that profit up here and have a lot of money waiting will buy it back up because people are waiting to get into crypto. Not just regular people, mind you. Now it's institutions waiting for a good price. They want to make that money too. We've got a lot of countries accepting crypto as a actual currency, a tradable asset. So that's an interesting thing to consider. Yes, it could stop at 3 trillion, go down, but there are a lot of people waiting for that big dip so they can buy back up and get some profits in. So this is why I feel like we're going to go down, come back up again, and then potentially have a shoulder, double shoulder, head and shoulder pattern, and then a big drive down. Big people will leave their crypto. They're going to buy it back down at the low. We're going to hover for a while. We've done this before, a long time. I mean, look at the difference between these two hills, right? How many days is that? Hill to hill, ending to beginning. That's about, Jesus. Oh, okay. Yeah, bars, days. Oh, 395, 4 divided by 13, about 3 years, less than 3 years. So we could be seeing another sort of stagnation in the crypto market for about a 3-year period before we probably will have another burst where in 2025 the whole world decides to accept crypto because we might have been gone through a financial crisis and the US dollar is worth shit and all the other fiat money is starting to be worth shit, and people eventually decide to completely entrust their assets into crypto. I am not a psychic, but I can make a pretty good storyline. So who knows? Who knows? But we are on the brink of a pretty interesting time based on general economic movement, based on general patterns in the market that I've seen happen again and again. And the news is starting to get a little bit sketchy on the factor that a lot of attacks on retail traders has emerged from the mainstream media, even though retail traders are their viewer, which is a little bit ridiculous to be attacking the person you are depending on to survive. But a lot of attacks against the retail investor for what is happening with a lot of these stocks that are being short squoze. And a lot of lawsuits. Today there is a lawsuit against a big institution, Citadel, that is trying to fight against protecting the retail investor. They are acting as a representative of the retail investor. However, all of their particular words are based on their own personal incentives. No attachment to the retail trader. Hashtag Citadel is not retail, no matter what they say. So another rich conglomerate trying to pretend to be a part of the retail mass. And with that, that's what's been happening. That's what's potentially going to happen. That is my perspective on the market so far. Shiba's going pretty crazy. I'm very much enjoying the Shiba rounds. I'm playing in and out with Shiba. About 30 million play and 30 million staked. So I am owning my Shibas. And I'm also playing around, learning a little bit of it, a bit of that day trade process. And it's pretty strong on a general consensus. We are going in an upward trend. We had a nice solid bounce up from the 329. We may have another dip to fortify. And we're going to probably start hitting that 4.00004 value a couple of times until we finally knock it out of the park. Potentially even approaching the 5. So that's my fun parts to the day. Doge, I haven't looked at much lately. It's been okay. It's been good. It's been kind of following the trends of SHIB. It might actually be a little bit stronger than SHIB for the short term. So that might be a play that I swap into real quick. Possibly. I have to do some trades now. That's it for me. That's it for the market. That's it for crypto. Enjoy your day. Make some money. Stay safe. And until next time. Peace.